Welcome to Weenie Trades. Thank you so much for joining me today. Today I'm going to be talking about the SPY, I'm going to be talking about Roblox and its earnings reaction. I'm going to be talking about SPCE and key levels to watch out for tomorrow. And then I'm going to be getting into a quick trading recap. It was a crazy day today and you definitely don't want to miss it. Lots of lessons to be learned. So first up, we got the S&P 500 SPY. Nice good gap up today, up 1.61%. We had a choppy little day today. You know, we're hitting 445, 446, selling off. 445, 446, selling off. So moving forward, it was really just a choppy day. I don't know really, in terms of the trading action, I don't think bulls won. I don't think bears won. If SPY is gapping up tomorrow, look for resistance at about the 448 to 450 area. I don't know if we get as high as 450, but we could. But 448 might be that next area of short-term resistance. Get above and hold above that? Cool, we're seeing 450. Get above and hold above 450? Oh, then we might be seeing 453. We'll talk about that at Weenie Trades Live if we're ever getting there. Otherwise, though, this was a breakdown. A SPY broke down. We sold off into a demand zone. Now we're coming up into that supply zone, that prior breakdown area. We'll see if this turns into resistance and SPY sells off from here. So S&P, if SPY is selling off, I am still expecting that tightening range. So what does that really look like? Well, it just means we could be coming back into like 441.60 down to like 440. So 441.60 down to 440. That's if SPY is gapping down, and that might be an area of support into the end of the week. So look for something like that if SPY is selling off. Otherwise, look for something like this if SPY is gapping up. That's the highest likelihood scenario based on my opinion. I'm not expecting any big breakouts this week, at least based on the chart formation. So EQ on the SPY. Next up we got is Roblox, RBLX. Roblox, negative reaction to the earnings report. And actually, if we check the trade tab, Roblox had a $15 expected move. Roblox down quite a bit in the after hours. You know, Roblox down 14, 15%. Believe it or not, that's with inside the expected move. So what does that really mean? Well, it means everybody that bought calls is getting clapped, and everybody that bought puts are probably going to get clapped. The puts might be up just a little bit. So Roblox tomorrow looks like a bearish setup to me. And hopefully you guys enjoyed the Sunday game plan where I was saying, hey, you probably don't want to be gambling on Roblox earnings. You know, just because Nancy's been right about other stocks doesn't mean she's going to be right about every stock. Play out your edge and just trade Roblox after earnings, you know, just trade it after earnings. And so now that Roblox is reported, let's see if it can bounce into the 67 area and find some resistance. So if we start to reject from 67, I might grab some put options, whatever it may be, and see if Roblox can start to tank. What's cool about being with inside the expected move is that it can still go outside the expected move, and then both calls and puts are at a discount tomorrow based off the expected range that could be coming out of a stock like Roblox. So that's the only trade setup I'm really looking at is 67 turning into resistance. Not really interested in anything else. Maybe it could get up to this 71 area and then turn into resistance. Otherwise, you just want to react intraday. Maybe there's a flag set up in a breakout. Maybe there's a bear flag set up in a breakdown. Keep an eye out on Roblox for good day trading momentum. SPCE had a great day today, offering up tickets, right? And so SPCE completely beaten down on the daily. I mean, gosh, you know, SPCE, if you're still in it, yeah, from anything higher than this price, I would be careful on celebrating this day, although it is a nice, good breakout day on volume. But SPCE, ever since, you know, the breakdown of 43, it's just been getting clapped, you know, dropping 80% from those highs. And so what this really is a short squeeze plus a bit of buying momentum as well. If you were watching Weenie Trades Live, I was saying, hey, SPCE over 930 looks like a good trade. And even in the pre-market, over 930, add over 940. Wow, congrats to anybody that caught this trade. Now, this is an amazing move. SPCE, call options up quite a bit. So now that SPCE has moved big, what's next for SPCE? Well, if we look at something like the 4-hour time frame, I see some support at about that 10. So 10, 10, 10, you know, $10 a share might be a potential short-term dip buy to see if it can't get some legs with the stop loss just underneath after it pivots. Or if it's extended into resistance, maybe SPCE can get up to 12 to 12.50, and that would be your next area of short-term resistance to see if it pulls back from here. That would still be a pretty big move from this point. However, short squeezes can get really extended if there's so many shorts that just can't cover. And if they can't cover, they eventually have to buy back at a certain price. Maybe they get margin called. I don't know. But either way, I wouldn't expect SPCE to get much higher than that 1250 level is basically what I'm saying with that resistance. And why didn't I take the SPCE trade? Well, it was because I was getting reamed by GameStop and Tesla. So let's get into the trading recap today. Lots of lessons to be learned. First up we got is GameStop. And GameStop, I was short yesterday from the breakdown. So if we take a look at the 5-minute chart, maybe we can see it a little bit better. Yeah, right over here. So GameStop establishes an opening range. This is a great setup because we're getting tight, We make a low and we make a high. Low, high, higher, low, lower, high. I start to go short GameStop at 123, and then I add on the breakdown. Nice, good move. Add, like 122. So I'm short. So I'm making money as the stock drops. I lose money if the stock goes higher. And I'm just cranking this short trade all day, taking some profits off at 120 and, taking some other profits off at 117. It's a nice, good trade. At the end of the day, we're selling off into the close, and I'm asking myself, I'm up quite a bit on this trade. I'm up 5 points. Let's grab another put. So I bought another put at the end of the day, which I rarely do. I never like buying things towards the close unless, it's strictly the part of the plan, of course, which that was kind of on the fly to grab a put option right before close. And I'm watching the SPY after hours, and I was actually looking at MES, the futures contracts. And I'm looking at it, I'm like, it looks like the market might gap up tomorrow. And so because of that, I might need to hedge my position. So what does that really mean? Well, if I am short GameStop, short GME, with some put options, puts, that I have negative delta. If SPY is gapping up, GameStop's likely going to gap up. There's been a lot of big correlation within stocks. So GameStop's gapping up, or SPY's gapping up, GameStop's gapping up. So I'm looking at the futures. I'm like, well, I've got a pretty big GameStop position. I should probably hedge that position and lock in the gains that I have today, which was yesterday. Some pretty good gains, about 360. Nothing too crazy, but $360. It's $360. I could lock that in by getting positive delta, because that'll offset each other. Yay, now all my deltas are neutralized. So I bought /MES futures contracts, and I just placed a stop in place. I just placed a stop loss. I just want to let the futures run, give it a nice, good, wide stop, and then I don't have to worry about it. Well, my mistake was placing a stop loss. I was wicked on the stop loss. Gosh, it made it a rough Valentine's Day, that's for sure. And I didn't need to make it a rough Valentine's Day, but I did because I was like, I stopped out of the futures. Now the futures, as soon as it stopped out, boom, rip. I think there's some back and forth news stuff going on with Russia and Ukraine. So either way, wicked out on the futures, which were to hedge my position. So now GameStop today is gapping up. And I'm like, oh boy, well, I'm going to give it some space. So GameStop gapping up. My position is red because I've lowered my average cost on the short trade. So now instead of being short from, up here, I'm short probably from right here. So now we're gapping up, I'm underwater. We come back down, I'm break even, but I'm like, well, I'm in this trade for a reason. Let's see if it can roll over from here. And guess what we do? If we don't roll over, we're probably breaking out. GameStop made a nice, good flat top resistance at 122. High, low, higher low, and we started to break out. And it's just one of those things where I just had to cut. I had to cut a pretty decent sized position on GameStop. So that was a fat L. I did save myself quite a bit of money because look, GameStop broke out, back tested the former breakout area, holds the support, and stair steps higher into the close. So yeah, GameStop, GG's to the apes. I know somebody on stream was saying you're going to get wrecked by GameStop. I was like, yeah, maybe. And as soon as I said maybe, I was like, maybe I actually will probably get reamed, especially once I was looking at that SPY after further analysis. But either way, GameStop, high risk, sizing up, decent hit on the GameStop puts. Maybe it was greedy, maybe it was not. I was in the money. I was thinking I had momentum on my side. I did not. It was just not GameStop's time to roll over. So moving forward on GameStop, maybe it squeezes one more time. Maybe it gets up to like this, like 142 area and then starts to reject. Or if it's coming underneath, 120 to 115, maybe we can start to roll over. Or the third scenario is just sideways. And then maybe we can get a breakdown. Still targeting this like $70 a share on GameStop within a month or two. We'll see if that occurs or not. But that's the way I see it. So pretty much a savage on GameStop, and I was a savage to the stock. So the stock was a savage to me. GG's apes. Next up we got is Tesla, and Tesla was a crazy L today. So, if you want to take a look at the different types of trades that I had, it was a decent red day. Second biggest red day of the year for me. And so that's why I'm just trying to learn and get better at what I'm seeing, and maybe map it out. Maybe you guys have some feedback to offer below in the comments. But this is why I always say I'm not the greatest trader, but I'm certainly not the worst. And I just need to get better at performing under pressure, performing while live. And sometimes it's a little bit easier said than done. And I just need to work it out. And this is the process of getting better. So if you guys enjoy this, hit the like button. It's not always easy to just talk about how you get clapped. And just for the record as well, I also generally don't like to gloat too much on the green days. The green days are for me. I just keep them to myself, withdraw a little bit of money from the brokerage account. Hey, those are for me. So if you don't hear me talk about my crazy winning days all the time, because sometimes it's just that the trade worked out just as planned, just as it should be. This is what happened. This is what I'm trying to teach about. What do you do if the trade doesn't go according to plan? And Tesla today, boy, and another thing that's tricky about this, sorry, continuing the rant, is that people are watching me take these trades. I'm not only feeling bad about my loss and my trade, but I'm worried about if somebody's following me, because I never say to follow me, but there's a lot of people that still do follow me. I feel bad if I'm red, because it means people that are following me might be red that particular day. Of course, you guys know if you follow every single trade exactly as I do it, you're gonna come away with a little bit of profit at least. But that's not the goal. So that's why I feel a little bit bad sometimes on stream. There, my gut feels just heavy. My heart just kind of hurts just a little bit, with a broken heart after Valentine's Day. Broken heart with my money at least. But Tesla over here, Tesla is saying I'm looking for the Tesla short, because yesterday I was looking at 900 as a level to short, and I hesitated. I was like, Tesla, nice good ascent, nice good flag set up into 900. Great rejection from 900. But I was thinking, if we can get extended past 900, I still like the short setup. Well, Tesla today, Tesla kind of got the best of me. Tesla, minus 828. But that's also because I have that bear call credit spread that I was talking about. And, that just means, Tesla had an amazing day today. Elon increased his stake, whatever it may be. So Tesla, booming. And basically in my thought, I'm having a vision in my head, and I'm just trying to trade that vision, ride or die, no matter what. And so what I'm trying to do is I'm envisioning Tesla comes into 915 and just dumps. This is what's in my mind right here, that type of scenario. And maybe I'm a buffoon for thinking Tesla can do that. But either way, Tesla did not do that. It just kind of grinded on higher, and over here actually shorted 920. So my first entry of the day was actually really good, covered right there. I want to get a little bit better of a move downward, but if I'm looking at the level 2, I'm seeing support. I'm going to take those quick little profits. And then things got tricky. This is some choppy price action right over here. Triggered in short, short, and then stopping out right at the top wick. They're barely just hitting that stop order and then rolling on over. And gosh, one of my biggest pet peeves is having my stop hit and then just watch it go and then hit right to that target, because this is the target on the Tesla short. Nice, good move. Either way, I built up a ton of ghetto spreads into spreads. So if we actually take a look at the trade log right over here, the Tesla actually is not that bad of a percent-wise hit. I'm just trying to focus on stepping up. I can be a consistently profitable trader at small and medium size. Now I just need to expand that consistency to big size. And I'm having a difficult time incrementally increasing my size, or it's just market conditions, whatever it may be. But every time I'm sizing up big, it's like Mr. Market or Mrs. Market says, boom, no, Weenie, stay at your comfort zone, stay at your size. So I have no problem being inside my comfort zone, risking, $100, $150. But the thing is that that trading level isn't exactly a full-time income type of trading. So what I'm trying to do is I'm trying to grow into the person that can be a full-time trader. Of course, I trade full-time, but I say trading is more of a strong part-time job for me. Of course, I get money from the stream, from people supporting the stream, but that's really about it. You know, I get occasional course sales every few months, and that's awesome. I really appreciate those people that support the channel, support the stream. Links in the description if you want to do it. Otherwise, that's all I have for today. But Tesla, you know, it was a tricky trade. You know, we're pushing into the close. But what's cool about this is I've neutralized a lot of my deltas. And what that means is how I'm going to be taking this trade moving forward is I am expecting a little bit of a pullback, you know, a 5.3% day. Hey, congrats the bulls. Likely at least like 1 to 3% of that is most likely to come on in. That's just an opinion. That's not fact. You know, if Tesla's gapping up and going, I'm just going to have to cut the remainder of the position. But if Tesla can stay underneath, you know, 910, a lot of my spreads mature, and I can still make about $5,000. So minus 1.3K today, we'll see. You know, if Tesla can just really hold underneath that 910, it should be good. Otherwise, if Tesla's above that 910, the maximum amount that I can lose is about $3,000. And that's just if I sat on my butt and did nothing. I'm probably going to cut it a little bit sooner than that. So we'll see what the S&P is up to. A lot of shenanigans. Today was the first kind of tricky red day. And it comes with some extra size, a little bit of an extra hard gut punch. But the lessons that I learned today are basically just trade what you see, not what you think. You know, I think Tesla's going to be the biggest rollover in the world. But the S&P was just gapping up and just holding its place. And, you know, if you were there at the pre-market, I was like, I don't like gap ups as much because they take a lot of the opportunity away from intraday traders because we just chopped and flopped all around. So SPY, bearish underneath 444 down to 441, maybe even 442. And then if we're gapping up, if we're hanging out above 445, you know, SPY could maybe see that 447 to 448. So hopefully you guys enjoyed today's video. Thanks for tuning in. I'll see you in the next one. Bye-bye.